What happened to prop desks when big banks started to have to comply with Volcker 1?
Right. I mean, prop trading basically vanished, and for good reason. That's sort of what brought about the financial crisis, and so Volcker basically did away with prop trading. Prop trading is still banned in Volcker 2.0, but they've really eased a bunch of things, especially around the edges, and it's sort of an open question, and we're going to find out soon enough, once this is implemented, once you sort of see things underneath the hood of the banks, what exactly is going on here. But there are some risks that perhaps prop trading might start to crop up in some corners of the banks.
Well, that's just it. First of all, do we know if prop trading desks will expand again thanks to this, or is it just easing compliance restrictions?
Well, as far as we understand it right now, trading securities are still banned from being prop traded, but there are some other securities, at least one Democratic FDIC member has warned, that are now sort of available to be potentially prop traded. It's still unclear whether that's going to happen, but there is a risk that Volcker opens this up. But one of the main points I think we should take away from this is that trading is not going to come back like it did before on Wall Street. There are a lot of structural reasons why, whether that's technological advancements, hedge fund declines. They're a big client of banks. So trading is not going to come back all of a sudden in great force just because we have Volcker 2.0 now.
So one of the changes is that it takes away the onus from regulators to prove that banks aren't prop trading and sort of puts the onus on banks themselves. In other words, it gives them the benefit of the doubt. Is that a good idea?
Right. So banks previously, that was one of their big criticisms. Jamie Dimon used to say we had to have a lawyer and we had to have a psychologist to determine whether this trade sort of met the criteria that the regulators were looking for. Now regulators are the ones that sort of have to come through and say, hey, this is a prop trade, this is not allowed under Volcker, whereas the banks sort of had to do that themselves beforehand.
Yeah. Now, what does it mean for banks trying to invest their own money in, say, for example, private equity or hedge funds?
It's making it a little bit easier. We're still waiting to see a few more rules on that front, a few more proposals, but it is going to be easier for them to invest in funds.